My name is Thea Guerin. I'm a director at the Center for Financial Services Innovation, and I'll be your moderator for today's discussion. But first, some housekeeping. All participants will be muted. You can ask questions using the control panel on the bottom right hand of your screen. I'll be taking questions and fielding them to our panelists towards the end of the discussion, but I encourage you to submit questions as the panelists are speaking. This webinar will be recorded, a recording of which will be emailed directly to all registered participants. With that, let's get started. I'm so pleased to be joined today by a group of industry leaders who have made enormous strides in measuring and improving their customers' financial health. But before I introduce these panelists in just a moment, I'd like to first invite Evelyn Stark, who leads the financial inclusion work at the MetLife Foundation, to say a few opening remarks. Evelyn, if you could unmute yourself now, please take it away.
Thanks, Thea, and everybody here today. I am Evelyn Stark. I do lead MetLife Foundation's financial health work, not just in the US, but also globally. The work that CFSI and indeed all of you on the webinar are doing on financial health is exciting and interesting here in the US, but it also has a really big knock-on effect globally as the international field is beginning to realize the limitations of what is generally called financial inclusion. Of course, it's not that we here in the US have all the answers, but I'm really pleased and glad that CFSI and our speakers today from Regions and SafetyNet and RightPat are sharing where they are on the path to improving their clients' financial health. And I'm looking forward to hearing from all of them, as I'm sure everybody else is. Thanks and welcome.
Thank you, Evelyn. So we're here today to talk about how your company can start measuring and improving the financial health of your customers, clients, and employees. But before we do that, I want to take a moment to level set, just so we're all on the same page. When we talk about financial health at CFSI, we talk about it on the individual and the household level, as well as for the financial service provider. For the individual or household, financial health comes about when your daily systems help you build resilience and pursue opportunities. So this definition of financial health is intimately tied to the individual actions and behaviors and attitudes of consumers, but there's a lot that financial service providers can do to offer high quality products and services to help individual consumers build financial health. When we talk about financial health for the financial services provider, we talk about aligning the success of the business, of your business, with the success of your consumer. Your business is doing well because your customers are doing well. This is a fairly logical proposition, but in many ways it represents a paradigm shift from how we as the financial services industry has been conducting our business for the last few decades. And CFSI has put together a financial health journey to help companies like yours advance along their own financial health journeys, to help their businesses orient themselves around their customers' financial lives. It begins with orienting and aligning yourself to the issues at hand, to the challenges that your customers are facing, and then proceeding to diagnosing your customers' financial health so that you can ultimately design and deliver the solutions that will help your customers lead financially healthy lives. Of course, it doesn't end there. Tracking and improving, assessing the solutions that you're offering and constantly revisiting those are the ways that you can understand whether your business is truly making a difference in your customers' financial lives. And two important stages of this financial health journey that I want to call out here are diagnose and track, because those are the stages in which measuring your customers' financial health comes into play. Only armed with an understanding of how your customers are doing financially can you design and deliver those solutions and then track those solutions, track the impact that you're having on your customers to understand whether you are truly making an impact on your customers' financial lives. So how do you get started? How do you start measuring, tracking, and improving your customers' lives? It's quite simple, really. It begins with collecting survey and transactional data that correspond to each of these 8 indicators that collectively represent, that you can collectively measure to understand your customers' financial health. Survey data will provide you with the overall, the high level, the holistic vision of your customers' financial health, while transactional data will provide you with a more granular and more nuanced understanding of how your customers are spending, saving, borrowing, and planning. So on today's webinar, we'll largely be talking about collecting survey data to understand and track your customers' financial health. But I do want you to keep in mind throughout this discussion that transactional data is an equally important part of the puzzle. To make this even easier for companies like yours that have understood the importance of measuring, CFSI has created a toolkit, an easy-to-use resource, the CFSI Financial Health Score Toolkit, a framework to help you measure and improve your customers' financial health. It has 3 simple parts. The first is a survey guide that consists of 8 multiple-choice questions that align with those 8 indicators of financial health. You can field that survey guide to your customers via email, via the survey platforms you already have, to encourage them to respond, to provide you with the data you need to understand your customers' financial health. The second key component is the scoring logic. You can use the scoring logic to calculate financial health scores for every customer who responds to the 8-question questionnaire. For each customer who responds, you'll receive 1 aggregate CFSI financial health score, as well as 4 subscores that correspond to the 4 components of financial health: spend, save, borrow, and plan. And then you can use the third component of the toolkit, the benchmarks, to make sense of your customer scores. We've provided a key that will allow you to understand whether your customers are healthy, coping, or vulnerable. Scores under 40 are considered vulnerable. Scores between 40 and 80 are coping, and scores above 80 are considered healthy. We also have a series of national and regional benchmarks that you can use to compare your own customer scores to these benchmarks, these national and regional benchmarks, to understand how your customers are faring compared to your peers. Very simple resource. I encourage you, as we're continuing through this webinar, to explore the toolkit online, to access it, and to think about how your company can get started using this easy-to-use resource as you listen to the discussion. I do want to point out that there are 2 primary ways that we've been encouraging companies to use the toolkit, and what we've started to see happen really naturally in the industry, in the field as well. The first use case is for internal diagnostic and strategic purposes. So we've been working with companies, some of the ones that you'll hear from in just a moment, to use the toolkit to understand their customers' financial health so they can assess gaps in their current offerings of products or services, so that they can plan ahead to add new features, to really use that diagnostic for internal analysis purposes. And I will say that is what we primarily design the toolkit for companies to use for this internal diagnostic purposes. But the second use case that we've seen, that we've started to encourage companies to adopt as well, is to share the results of the toolkit directly with your customers, clients, or employees, to use it as a way to begin a dialogue with these individuals about their own financial health. And in just a moment, we'll hear from the 3 companies who are the panelists on today's webinar who have started using the toolkit in each of these ways. But first, I want to remind you that as you're listening to these 3 individual companies, I want to encourage you to keep in mind that what you'll hear today is a small glimpse into what's happening across the industry. We really are seeing a movement, if you will, of early adopters of both the CFSI Financial Health Score Toolkit itself, as well as those who are beginning to measure and track their customers' financial health, to invest in their customers' financial health in early ways. So I wanted to share these numbers for you to keep that in mind. Since we officially released the Financial Health Score Toolkit back in June of this year at our annual conference Emerge, we've seen more than 200 companies have accessed the CFSI Financial Health Score Toolkit online. We've also seen 18 financial health leaders, these are members of CFSI's network who are at the forefront of financial health measurement. 18 of these companies have committed to use this framework to measure and track their customers' financial health in 2018. 12 of these companies are diagnosing or tracking their customers' financial health for these internal strategic diagnostic purposes, and 6 of these leaders of sharing financial health scores directly with their customers, clients, or employees. So with that, I'd like to turn to our panelists. I'm thrilled today to be joined by Michael Cyr, VP of Now Banking at Regions Bank, Rich Fisher, Director of Innovation at SafetyNet LLC, and Tracy Zarzi-Fors, VP of Marketing at RightPat Credit Union. Each of these companies are members of CFSI's network. Each of them are the financial health leaders that I mentioned, and each of them are early adopters of CFSI's financial health measurement framework. And the way that I'd like to structure our discussion is that I'm going to ask each of these panelists to discuss and to react to a series of best practices for financial health measurement that I'll put up on the screen. These best practices are best practices that we've observed from each of these three individual companies, as well as the couple dozen other companies that we've worked with to measure and improve their customers' financial health to date. So for my first discussion prompt, my first best practice, I'd like to start with a simple one, that your company's goals should inform its financial health measurement strategy. Whether you're striving to measure your customers' financial health for the internal diagnostic purposes, or whether you're hoping to engage your customers in a dialogue about financial health, the way that you implement, the way that you get started adopting the toolkit or whatever measurement strategy you use will really inform your implementation plan. So with that, I'm going to ask each of the panelists to unmute themselves when they get ready to talk. And I'm going to start with SafetyNet LLC. I'm going to ask SafetyNet and both RightPat Credit Union and Regions, when we go to them next, to introduce their companies and to tell us a little bit about the goals of their overall financial health measurement strategy and how that's informed their implementation plan. So Rich, why don't we start with you?
Hello and welcome. I'm Rich Fisher, Director of Innovation at the Horizon 3 Innovation Center. The Horizon 3 Innovation Center operates as a standalone business unit of CUNA Mutual Group. We accomplish the goal of introducing new products to new markets through the Innovation Center and develop our own internal processes, approaches to service, relevant metrics appropriate for each stage of innovation. The H3IC leadership team reports progress to CMG's executive leadership team as well as their board. In mid-2016, the Horizon Innovation Center launched its very first product, SafetyNet. SafetyNet's mission is to improve the financial well-being of millions of hardworking people in America, developing innovation financial solutions that will help individuals manage unexpected cash flow, bill payment, and savings challenges. SafetyNet will build a sustainable business that meets customers' rapidly changing acute and underserved financial needs. The goal of measurement and implementation, it was new for us. We are using it to inform strategy at this point, making decisions based on knowing the financial segment score of each of our consumers. We have a small group of customers at this point relative to others on the call. We have about 2,000 customers, and about 1,100 of them have responded to the survey, and we are using that to inform our strategy.
Thank you, Rich. Let me ask you to just quickly clarify, what is the product that you currently have in market, and who are your customers?
So our first product in market, SafetyNet, is a single individual product for consumers sold direct through the internet. It provides for job loss and disability protection. If consumers lose their job or are unable to work due to disability, we make a single lump sum payment of up to $9,000 to help them through that period while they either recover and get back to work or find another job.
Fantastic. And one more question for you, Rich, before I turn to the other panelists. So you mentioned that you reached out to an initial group of customers to collect data for internal diagnostic and strategic purposes. What exactly were you hoping to, or are you hoping to learn from that data?
So what we were really hoping to learn is deeper insight into those consumers so that we could better meet their needs, not just along that first line of products, but along their full spectrum of financial need. one of the sub scores, the plan, is an important one. We're an insurance company, and so we rely on people's desire or willingness to plan for future events versus reacting in the now. And so we were focused on better understanding, both from a segmentation for marketing point of view, but also for building future designs to help people.
Fantastic. Thank you, Rich. Michael, why don't we turn to you over at Regions?
All right, thank you. So I'm Michael Sear. I'm with Regions Bank. We are a large regional bank in the southeastern United States with about 1,500 branches across 15 states. We have a long history of financial inclusion. My business group, Now Banking, is consists of non-traditional bank products typically used by the unbanked or underbanked consumer. We're one of the few banks that operates in this area. We're using the CFSI Financial Health Toolkit internally as a diagnostic and strategic tool right now. We are doing surveys and then a data and segmentation exercise. It's for us to gain insight and to inform strategy. And at this point, we're not customer facing, although that is a phase 2 plan.
Same question to you, Michael, that I put to Rich. Ultimately, what are you hoping to learn from this analysis?
Well, I think we don't know what we don't know, and everybody that has been involved so far is just excited to get this insight and to see, have another data point into our customers' financial health. What I'd like to get out of it is to be at a point where we can inform strategy with a little bit more direction than maybe we would have had if we didn't have this facet of information on our customers.
Fantastic. Thank you, Michael. Tracy, at Wright Pat Credit Union, how about your company's goals and its implementation strategy?
Development with Wright Pat Credit Union. I hope that mute didn't interfere. At Wright Pat, we have 31 member centers in the central and southwest area of Ohio. And about 3 years ago, we actually did a diagnostic. We did one of your original surveys, one of CFSI's original survey, and what we discovered is that 60% of our members and our employees were either in a coping or vulnerable state, living paycheck to paycheck. And to us, that just didn't seem right. I mean, we wanted to learn how healthy they were or what their financial well-being was so that we could figure out how, number one, to engage them, how to create products and services for them that would benefit them and then also benefit the credit union, because it's a win-win situation, as Thea talked about earlier. So what we ended up doing is putting together a 3-year plan that included products and services, but more intentionally what we created is a program called Money Magnifier that uses the current health score toolkit. And what we did is we created a whole program around it that includes taking inventory of where our members are currently at, and then having them take this survey so that they get a reality check, basically, as to, you think you're here, but where are you really at? From there, when you get the scores, we actually worked with scores initially, and we did take those off, and we have colors now, and we'll talk about that in a little while. We mapped out individual scenarios based on the answers or the scores that we got, so that when they left the meeting, they had actionable plans on how they could improve their financial situation. And those that were healthy could improve it more. those that were vulnerable, getting them on a path to where at least we could get them to coping, and then really working with the coping segment so that they didn't fall down into that vulnerable state. And so we look at this as an engagement strategy. We differentiate on service. And so this is one way that we can help our members live the life that they want to live, and to serve them is through this particular program. And as part of our strategic business initiatives that we create, this is a thread of who we are when it comes to financial health and well-being. When we create a new product or a new service, we look at it through the lens of financial well-being, and how is it going to benefit the member, and what does it look like. And there's lots of little segments that get looked at, because there's lots of different segments of people based on where they score themselves or what their life situation is. So that's currently where we're at. I would say we're expanding it. We've currently been doing this in Columbus with 5 member centers, Columbus, Ohio, and we're now expanding it to go to employer groups that we have relationships with, large-scale ones, and then also we're bringing it internally so that we can offer this to our own employees, watch their behavior, whether or not they gain some more peace of mind, and then also the pay it forward that they'll be able to do with our members. So we've gotten a lot of really great information out of this program.
Thank you, Tracy. I'm always so impressed learning more about where you've been with the Money Magnifier program and where you plan to take it. And so we'll come back to you in just a moment. I appreciate each of those introductions. I want to move on to the next best practice, which is that offering incentives and developing the right framing can boost customer response rates. And this is important because, as you can imagine, the data that you collect will only be as good, or the insights that you draw, I should say, will only be as good as the data you collect. So I'd like to kick it back to Rich to tell us a little bit about how he reached out to the subset of customers, the incredibly high response rates that SafetyNet secured, and why and how he thinks that you guys saw the engagement that you did there.
Sure, thank you. The point to keep in mind here is we had a very small customer base. So as we tested and went about starting this measurement, it really was easy for us to tie a financial number to it, to in effect pay for customers to engage with us in the survey. But our customer base was already very used to us contacting them. We call each and every customer upon purchase to make sure they understand what they bought. And then we also talk to them about where they found it. We gain lots of insights from that customer because we have small numbers. As we started this approach, we wanted to learn, we wanted to have them answer these questions and really learn from them. We knew that that would draw value for us. And so we started to compensate people for it. So I think we opened by saying, hey, if they take this survey, we'll send them a $50 prepaid Visa card. And we got tremendous response from that. We actually dropped that to $25 now because we didn't need to pay $50. And we are achieving close to a 45% response rate on this offer by going ahead and providing some commission to them. I believe without that, we could probably still be in that 10% range that they're used to engaging with us, and this is just one more engagement.
That's fantastic. 45% is incredibly high when it comes to customer surveys. As folks on this line, the panel, the guests, on this webinar likely know, very impressive, and I think it just speaks to the relationships that you've built with your customers to date. I will point out that offering incentives is one way to boost response rates. I think there's a lot to be said for adopting the right framing. Michael, I'm curious, you went about the engagement with your customers in a slightly different way. You had a far larger customer base to work with. Is there anything you'd like to add to Rich's response about what type of response rates you've seen and how and why you've been successful there? And Michael, if you're speaking, you may be on mute.
Sorry about that. We have had a pretty healthy response rate as far as surveys go, in the 4 to 5% range. We have not offered an incentive yet, but I will say one place where we saw high response at the end of the survey, we left an open-ended question. Is there anything you'd like to tell us about your household's financial life? And we saw around 30% of the people that took the survey also took the time to write a personalized response to that question. And it was all over the map. It was healthy, striving, struggling, vulnerable, and people telling us they were healthy and why they thought they were, people telling us they were struggling and where they needed help. And our takeaway from that was this is something customers want to engage with us on. So I hope as we move forward and we're doing more of these things like offering an incentive or telling people up front, this is part of what we do to make better decisions and serve you better, we'll continue to see customers wanting to engage and provide responses.
Absolutely. And Michael, we'll talk about buy-in towards the end of the webinar, but I imagine that those open-ended responses, the qualitative data that you collected has gone a long way in helping your colleagues and others get on board with the initiative. I really think of that as the value of some of these open-ended responses. So glad to hear that you saw that engagement there. Great. So then let's move on to the third best practice that we've observed to date, and that's that customer interactions must go beyond sharing a score and should include actionable advice and ongoing follow-up. So I'm going to shift gears and kick it back to Tracy from RightPat to tell us a little bit to provide us with a little bit more detail on what some of those coaching and member interactions have looked like at RightPat, to share a little bit more insight on what she started to suggest, that they're sharing colors, not scores, and then to specifically highlight the 6-month ongoing follow-up that the credit union is exploring as well.
Okay, yeah, thank you. So it's been a slow, good progress with the program. It's really hard to get people to sit down and have a conversation about their finances, and we've known this for many years. We did something called the savings race for like 7 or 8, and our whole point on doing this is to get people to have that dialogue. And there's a survey out there that says that 68% of Americans would rather talk about their weight versus their finances, and I don't know about many of you, but I don't want to talk about my weight. So we have the folks that are sitting down and talking to our coaches are kind of all over the place, and they very much are mainly on the coping, a little bit on the vulnerability, a little bit on the healthy, but probably overall more coping. And they come in and it's very difficult for them to have a conversation about their finances. It can be uncomfortable. So one of the things that we learned is that your coaches have to have that emotional intelligence and really figure out how to navigate them through. That, with our program, what we've done with the 4 categories, depending on where they come in on their scoring, and we took the scores out and we used colors, so it's the basically the red, yellow, and green, and we've mapped out actionable plans to each of those. So it's given them a little bit more ability to have constructive conversations, because red is kind of stop, we've got to pause and really talk about this. Yellow is like, okay, how can we fine tune? What are the things that we can do to get you to where you need to be? And red is, okay, or green is, you've got opportunity to further yourself. And what we found is that when we took the scores off, because they really align themselves with the scores as school grades almost. And now that we've got the new tool, so this was before we got the new tool, we actually have some benchmarks. So we're going to do some A/B testing on that to figure out whether or not having that national information to say, here's where you fall, within the 40 to 80. And so you're with this group of Americans. Let's be constructive. Let's get you to where you need to be currently. But we have found that a lot of people, and we don't scare away from sharing this, that there's going to be homework that you have to do. There's no magic wand. But we've found that you have subsets of people that know but don't want to do anything, people that want to do something, but it might take some hand-holding, and then you've got people that just needed someone to point out the solution, and then they run with it, and they'll come back, and they'll say, okay, what's next, what's next, what's next? So that's kind of what we've seen with the program right now, and we're really in a learning phase from it, and that's constant iteration and making an adjustment to decide where are we going next with it. As far as the 6 months, so what we do is we have them come in, do the intake originally, have them do their health score, have plans, and we have follow-up phone calls, and they can come in and visit us. But in 6 months, we ask them to come back and rescore so that we can understand whether or not they're making progress, number one. But number two, if these micro needles are moving, so to speak, then that means that the macro needle eventually is going to change and modify. And that's what we want to see is our ultimate, here's where we're rated from a whole entire membership. So if individual members are gaining some success, then that needle eventually must move. And so that's been kind of hard to get them to come back and do that survey. Part of it is, I think, if we could automate it and send it to them through a website or some sort of app, that would probably be more beneficial. But one of the things that we've decided to do, and we've already heard that incentives can make a difference, is we're asking them to come in and sit down with us, and we will give them a $25 gift card as well to have that final conversation with us. So we just decided to do that in the last couple of weeks. And I don't have data right now on how that's going, but it's hard to get people to come back in.
Absolutely, and we'll talk about the ongoing tracking in just a moment. Tracy, any other reactions from some of your coaches, the credit union coaches, your employees that you'd like to share at this point?
It's interesting because when we first rolled this out, a lot of them said from the very beginning, oh, this is a tool that we've been waiting for and that members will take advantage of. And some coaches are really extremely good. You have to have someone that can keep to the course of the conversation and not go down too many beaten paths when it comes to their scenario, the member's scenario, because it may be that they want to have counseling for their personal issues. So you kind of got to keep them on track. So you have to have someone that can do that ever so gently. But interesting, some of the people that said this is what our members always wanted didn't necessarily engage in the survey the way that we had hoped that they would. They just, for some reason, couldn't go there. So what we've really figured out is that you have to have a coach that has a passion for helping people, that they're not necessarily motivated by some sort of financial gain in an account buyout or something along that line. So when we're looking at how do we deploy this throughout the organization, those are the things that we're taking into consideration. It's got to be that unique individual that wants to be a part of making a difference in people's lives.
Absolutely. I've heard you say again and again about the importance of empathy. And I think what you're pointing to here is the intention-action gap that we see in customers and members as well as potentially employees. So thank you for that.
You're welcome.
Let's move on. Yeah, fantastic. Let's move on then to best practice number 4. So that's around the fact that transactional data can augment survey data and provide additional insights into customers' financial health. And you heard me say at the beginning of this webinar that the 2 primary ways that you can collect data on your customers' financial health is by fielding surveys and then mining your own transactional and account data for insights. And again, we've spent much of this webinar focusing on the early learnings, the early successes that we've had to date, that other companies have had to date collecting survey data. But many companies, including CFSI and the companies on as panelists today, are also starting to think about how transactional data can complete the picture of an individual's or a customer base's financial health. So Michael, I'd love to turn back to you and ask you to tell us a little bit about how Regions is thinking about eventually using transactional data to augment some of the insights that you've already derived from the survey data you've collected.
Sure, absolutely. So as I mentioned, we started with surveys. We did a pilot survey at the end of last year that went to 10,000 customers, and then just in the last couple months, we fielded a survey to another 80,000 customers. And based on this sample size, our next process is to look at all the data that we have on our customers, our transactional data, account level data, other demographic data, cycle codes, all the information we have available. And we're going to run different models to segment the customer base. So we'll look for traits or characteristics that are the same within groups and dissimilar between groups, and then use that model to not assign a score, but to put all of the 2 million households that we have in one of the 7 buckets. So you've heard us refer to, there's a numerical score that runs from 0 to 100, and then there's a 3 bucket level of coping and vulnerable and striving. There's, in the CFSI information, there's one level in between that, and we thought that would be the right level to use the data, try to assign a customer a bucket based on the best information we have, and then use that data to drive strategy and inform decisions. I also think it will be interesting as we continue to get more surveys in the future to see how close our model is to our customers' perception, if there are opportunities to tweak the model, or are there differences between how people see themselves and what the data shows.
Absolutely. And Michael, you may have mentioned this at the beginning of your remarks, but is your goal then with this transactional model to be able to score all of your households so that you have somewhat of a way to gauge their financial health without having them complete the survey? Is that correct?
Yes. So we won't assign everybody a numerical score because I don't think we can get that precise, but we will say, are you vulnerable? Are you coping? Are you striving? Are you thriving? One of the 7 buckets based on where we think they fall in the numerical range.
Got it. And Regions is in a unique position because of all the products, all the different relationships that you have with your customers. So I imagine that you'll be mining those different product lines, the different relationships that you have, mining all of those for informative data. Is that correct as well?
Well, I think anybody that's listening that works for a large organization knows that the problem is not necessarily having the data. The problem is getting to the data. So we're going to start with the data we have and continue to refine it, maybe add information to it and refine the model. We know a lot about our customers and their accounts and the way they transact and the way they behave. And I think the survey will help us develop the model, but the survey is also going to help us develop insights into customers that we can't tell from transactional information. An example that I've used is we may have 2 customers that look exactly the same from what we can see in our data. But one customer says, I have no problem saving, and I could live for 6 months on my savings. And another customer says, I have a real problem saving, and I don't think I could live for a week on my savings. They may look exactly the same to us. So our takeaway from that, with no other data to support it, but this self-reported information from the customer is clearly somebody does not have problem saving, and we should not talk to that customer the same way we talk to the customer that says they do have a problem saving, where without that information, those customers look the same and they would have got the same type of messaging.
Indeed, that makes a lot of sense. And I've said this to Michael before, and I'll say it to each of the listeners on today's webinar, that this is work that CFSI is actively looking forward to staying in touch with Regions and with your companies as you explore how to leverage transactional data to augment the survey data insights. I'll talk about in just a moment at the end of the webinar some work that we're doing through the U.S. Financial Health Pulse Research Initiative to look at consumers' transactional and survey data on a large scale, on a large nationally representative scale. But we really, as an industry, really are at the beginning of this exploration, and so it's really a call to action for all of us, and encouragement that CFSI would like to stay in touch with any companies who are making progress down this road. So let me skip ahead to the next best practice. We talked about this a little bit, the value of ongoing tracking. I'm going to come back to this one at the end if we have time, but I see some great audience questions coming in. I encourage the rest of you, if you have questions, to go ahead and enter them now. I do want our panelists to address the last best practice here, this idea of getting started, that there's no one right way to do it. Quick wins can sometimes help secure buy-in. So Rich, why don't I kick this one over to you? Why don't you get us started first, talking a little bit about how you were able to launch your initiative, and then any encouragement, any words of wisdom you have for other companies just looking to get started measuring and tracking their own customers' financial health.
Sounds good. I think for us, we knew we wanted to learn more about these customers, prospects or customers, whether they had bought or not, to help define our strategy. So when the original toolkit came out, and even before the toolkit was out, there was a series of a long list of questions that was too long for survey format. CFSI did an excellent job paring that list down. And as soon as we saw it at a reasonable level to do an online survey, we just decided to go. And we started and we learned. And the first interactions with customers on it, got some scores in, and it just continued to build from that. It's challenging sometimes to afford the energy to go get consumer data, to go get consumer insights. But for an organization like ours, not having them is riskier than spending time to go get them. So we literally just decided and started to put the process in place to go at it. Now, we come at that from a base where we were talking to every customer, so it wasn't hard for us to extend that reach to them. But we did just decide we're going to do this, and we're going to see how it goes, and it built from there.
That's great. Michael, how about your buy-in for initially launching this initiative?
Well, as I mentioned, we started with a small pilot survey, and we targeted now banking customers, so customers that are primarily using our unbanked, underbanked services, and our what we call Regions at Work program. And I won't go into a whole lot of detail just in the interest of time, but we took those two subsegments, and that was our pilot survey. And when we got the initial results back, we shared them with a pretty large group of stakeholders throughout the bank. So as we were ramping up, saying this is a strategy that we want to execute, I think getting people involved early in the process, even if their job might not touch this until later in the process. So, having people that create financial education content or marketing content or product features, and having them involved early in the process to hear the results, read the verbatims, see how we compare to the CFSI benchmarks. I think it was an easy and non-threatening way to get people interested and get people to buy in to the strategy. I mean, everybody is busy, everybody has a full-time job, and if I had walked in and said, everybody stop what you're doing and this is the number one thing everybody has to work on, I don't think there's an organization out there that would react positively to that. So we've taken a very linear approach, and we've gotten people involved early in the process, and I think it's really helped. People have been very enthusiastic and positive, and it gets them thinking, what am I going to do and how am I going to be able to use this for my job down the line?
Fantastic. Makes sense. And Tracy, how about you?
We're a really high transacting credit union. Our members love to come and see us in the member centers. And when we went to a new market in Columbus, it's a much smaller market, and so we didn't have the base that we have here in Dayton, and we've been here for 85 years, so you still have to build the awareness when you're even an hour away. So it was a nice opportunity for us to create this as kind of a way to dig deeper and have a different conversation with our members. So we called it a pilot, basically, and started really small. And we had the opportunity to have those conversations because the traffic wasn't overwhelming. There wasn't a lot of transactions that had to be done. And really, quite frankly, this would be a way to differentiate us. So I just encourage everybody, if you're going to do it, start small, learn a lot, adjust, redeploy, and then learn, modify, and figure out how it's going to work. Because it's not necessarily going to work across all of your branches or your member centers. It may or may not work in your help center. It may or may not be online or through employer groups. You've kind of got to figure out where might the niche be, and then where's the next niche and how would that look? Because my vision was every single, we call our representatives financial coaches. My original vision was every single financial coach in the credit union was going to do this. Now I'm like, well, if we have some specialists that can do this and we have them deployed at various points in the credit union and through different channels, even externally through those employer groups, this could be done. So you kind of got to take the grandiose vision and nugget it down and figure out, well, where am I going to start? And then eventually, how might it evolve? And I also created a committee around it and got buy-in that way. And I even said to them right away, if this is me trying to push something that you all don't think is going to work, let me know now, because I would rather fail fast. And as we explained to them some of the wins that we had in the last 6 months, they're like, no, we want to do this. So you have to do a little bit of lobbying internally. And it's not necessarily the people that you have to lobby at the top. It's some of the managers or area managers or the directors. And and it's not necessarily just in the retail network. Get your lending folks involved too. And if you can do that, it sort of becomes unstoppable at that point.
Wise words from our panelists. So we have a number of great questions coming in from our audience. So I want to now turn to the audience Q&A portion of the webinar. And the first question that I want to field to the group, and happy to let anybody chime in with their response first. The first question is about pushback from customers. Did either of you, any of you, experience any pushback in verbal and written form from customers as you fielded this survey, as you engaged them in conversations?
Well, we're doing our survey, this part of our survey, face-to-face, and so what we've done is created some marketing around it so people actually ask about it. In addition, we ask people. So if they come in and they sit down and they want to fill out an application for a car loan and all of a sudden they get declined for the car loan, we let them know that we've got a tool that might help them better understand why that car loan was declined. So it's not just about the score, it's about their personal behavior and their actions and their current situation. So it's, I think, the way that you go about having those conversations, and some people will say no, and that's okay, but I don't think that we've ever had any negative experiences.
So ours has been all online, and it's just really easy to ignore it. If you don't want it, you don't jump into the survey. So we've had no negative responses, only positive responses once we started sharing scores.
And, I'll say at this point, we're not sharing a score with the customer, but that question comes up frequently. Is there any concern that telling someone they're unhealthy will upset them or alienate them? And I think even as we've done the preliminary surveys without even telling people what a score is, people, well, first of all, they can control the output by controlling the answers. So if you don't want to get a bad score, you can game it pretty easily. But I think people who take the survey are genuinely interested. Like they're curious about where they stand, and I don't think anybody would come out with an unhealthy score and be just shocked to hear that they're unhealthy. I think people have a pretty good idea of where they stand. I think giving them something to quantify it and a way to measure improvement it is a good thing, no matter where you're starting off.
Well, and I think to your point, we did have feedback that the scores sometimes would make people feel disappointed. But again, it's the way that your coaches are coached to have that conversation. But that was the reason why we changed it from scores to colors, because it's a much easier conversation to have face-to-face on colors. That would be difficult to have that conversation through the online. So you'd have to have a score online, as I see it, versus in person. It's a different scenario.
That's correct. We are sharing the online score. We didn't do that at the very onset. We wanted to, but we felt like we didn't have anything positive to give a customer as they got that score. We bridged that gap with a partnership with an organization called Spring 4, which is an online and inbound call center that just helps people that are struggling in financial ways. And we have found that even if we're sharing a low score, sharing a resource or a set of resources that could help them, customers have been very happy with that approach.
And I imagine there's something to be said about contextualizing the scores within the context of those national and regional benchmarks that I mentioned. A 22-year-old would presumably have a much lower score than a 45-year-old, but contextualized within the context of his or her peers in similar regions, similar incomes, household sizes, etc. There's likely a way to contextualize those results in a way that makes a bit more sense and is motivating rather than discouraging. I want to slip in another audience question. We've got a lot of fantastic ones, and I'm going to assure our audience that if we don't get to all of these, if we don't get to yours, I'll make a point to answer them offline. And there's been a couple of requests for the panelists' information, and we can figure out how to get you in touch with the panelists as well. But one of the other audience questions that I want to put to our panelists is this idea of the importance of doing your own diagnostic on your customers versus simply looking at aggregated national results or average benchmarks. Is there something to be said, or what role do you think doing the diagnostic yourself, having the data on your own customer plays in securing the buy-in from your executive team?
Well, I think it's really, your markets are so different, and the folks that are in your markets are so different that you can't assume you're going to look and smell the same as national or even regional information. But I think what's really important is to understand how your organization looks in comparison to them, because that helps you create those strategies and those products and services that are needed in your area. So I think it's highly important for you not to assume that you look like a national result or a regional result, because each market that you're in is going to be very different. I mean, Dayton, Ohio looks very different from Columbus, for example, and so we can't necessarily assume that our Columbus folks are the same as Dayton, and our results showed that they were not. So I would highly encourage no one to assume.
And looking just at those aggregate results isn't gonna allow you to do the impact tracking, the really assessing over time, which is so important to understanding the impact that your company is having. I want to shift gears and put in one final question from our audience and then wrap things up, and that's around the surveying of your customers, the measuring of their financial health, and how it relates to safety and soundness, how it relates to other regulatory concerns on your mind. Do you see a relationship there? Or do you see this work as being divorced from any safety and soundness considerations?
I can give my opinion on that. Safety and soundness specifically, I don't know how this might tie to that, but I do think that measuring financial health and making this a cornerstone of your customer strategy has to reflect well on the organization and is going to be seen as a positive thing by regulators. At CFSI events, I've heard the expression of we want to measure our success by the positive impact we have on our customers' financial health, and not by the number of products sold. And I think in this post-Wells Fargo scandal world, that is a much better measurement to be able to tout versus a widget goal.
Well, I would agree with that. If your business strategy is growth for the sake of just growing, then this might not be a model that's going to fit in it for you. I mean, this really is, you're going hand in hand and side by side with the people that you serve. And it takes time. This is a slow process. There's not going to be a quick overnight change. It's got to be, you're climbing a mountain and you're climbing a mountain together. So I agree, it's a cornerstone to your ultimate business strategy.
Fantastic. Well said all around. So I could talk to these three all day. Unfortunately, we are at time. So I want to thank the three of them for joining us today. Again, I know that some folks were interested in connecting with these three directly offline, so let me help facilitate that afterward. I do want to leave you with a few quick calls to action here. If you haven't already, please do go ahead and explore the Financial Health Toolkit, the toolkit that each of these three companies have used to start measuring and diagnosing their company's financial health, their customers' financial health, available at cfsinnovation.org/score. And I will take the opportunity to point out that this is just one of many tools that you can use to assess your customers' financial health. We put it together as this easy to use resource, but we're more than happy to work with you to develop proprietary, customized tools, and we absolutely encourage you to use other types of tools, whether it be the model from the CFPB or other proprietary models. The point is to start investing in diagnosing your customers' financial health. If this tool helps you do that, by all means use it. Please do also stay tuned for future insights. So this Financial Health Leaders Program that I've mentioned a few times now, we'll be continuing to work with these leaders to explore some of the questions that we just started touching upon. How do you leverage transactional data to augment survey data? How do you track changes in customers' financial health over time? And how do you continue to build the business case for improving your customers' financial health? If you're already a network member and you already are measuring, please reach out to me today to apply for this program. It really is a neat opportunity for you to stay in touch and engage in peer learning opportunities with other financial health leaders. And finally, stay tuned for future insights from the U.S. Financial Health Pulse. That's the research initiative I mentioned, where we're collecting survey data and transactional data from a nationally representative snapshot of Americans to be able to assess correlations between the data and to really keep a finger on the pulse of financial health in the country. So with that, let me leave you with my contact information. Feel free to email me at tguerin@cfsinnovation.org. Again, I plan to respond to each of these individual questions and happy to broker introductions to any of our panelists. Thank you so much for joining us. We hope to see you on the next webinar. Have a good day.